there was an interesting interview with Judith Rodin, president of the Rockefeller Foundation, on this issue of the impact investing and how important it was. What I took away from that was that it is important, and setting some reason to do it is clear. It's hard, like anything else. You can make money, but it's not the same as investing in full-time equities or things like that. You think of it somewhat as an alternative. But what is lost in that discussion is that every investment has an impact. So to do impact investing without thinking of the impacts, positive and negative, of the rest of your investing is somewhat a question. The other issue with impact investing is outcomes. Obviously, you're investing for a particular outcome. That's the whole idea of it. It's not just looking at financial and doing. I've known a number of people who've gotten these monies. They say they're spending almost 20% of their time trying to figure out a way of measuring what's happening. Now, that's the sort of management dictum, if you can't measure it, you can't manage it. I personally am of the Einstein school, having picked this not out of reading deep Einstein, but out of a quote book, quite frankly, that Einstein once said in his Nobel address in 1921 that what counts doesn't always get counted, and what's counted doesn't always count. And we're dealing with issues that are complicated and are not going to lend themselves to easy metrics. Furthermore, one of the problems there is that the assessments are done at the end of a period of time, usually the 5-year of the grant or the 10-year of the grant. But what does it mean that you have built 100 units of environmentally sound housing for poor people? It means there are 100 users. It doesn't tell you anything about what this does and will do to community. Does it bring it together? Does it keep it apart? Does it change things in ways that you hadn't thought of? And that's the issue of predictable surprises. There's a clear case in Baltimore years ago. Tore down some really tear-downable slums and built some very nice housing. But the planners and architects missed one thing. The old houses had porches, and the new houses had stoops. And the crime rate in the area went up. And the issue was that the old mothers and grandmothers used to sit on the porches and say, "Hey, Johnny, it's 9:30, Mom wants you home." There was no place for them to sit. And 5 years later, you saw these trends in some of the breakdown of the community. So what are we measuring in all of this? Community investing is terribly important. There are an enormous number of vehicles out there now. We at Reynolds, we need more do that as our cash rather than putting the money in some CD in Chase or something like that. We do it in some community development financial institution, get a reasonable rate of return, and are doing something in the community. You'll learn a lot more, talk a lot more about alternative investments in clean tech, and there's a whole range of things. There is a handbook that was put out in 2008 from the Institute for Responsible Investing at Harvard, and I'll give Matt the information, called the Handbook on Responsible Investing in All Asset Classes. It's out of date in terms of its details, but in broad outline, it gives you a sense of the things you can do. I've spoken too long. Let me just add one small point. Finance can be fun. Now, those are two words that you don't usually find in the same sentence. I found when we started this at the Noyes Foundation back in 1992-93, we first outlawed finances as a language. And anybody on the finance committee, any manager who was coming in to make a proposal to us had to speak in English. And if you couldn't do it, bye-bye. That was the first thing. It was the first time that board exercised its fiduciary duty, because prior to that, our finance chair would come in and say, the alpha, the beta, the chi-square is this. And the Rodin position was throughout the boardroom. They got involved. We were a consensus foundation, but occasionally there was something coming up. I used to plan the finance discussion either just before the an area that might have been somewhat problematic, or just after, to bring people back because it was really exciting. And exciting is, again, not a word that most people in philanthropy think of about finance. The other issue, and I'll leave you with this, is a quote from the great philosopher Anonymous. Although if you go to the website now, there are a lot of people who are claiming it, but I first saw it as anonymous, and I believe that. If you think you're too small to make a difference, you've never been in bed with a mosquito. The Reynolds Foundation now is $23 million. Need More Fund is about that. When I left Noise, it was $100 million, and now it's about 40 or 45. I cannot take credit for what they've done over the years since I've left, but with certain things like bubbles coming up and the like. Conventional wisdom tells us not to do this, but there's a wonderful line, and I'll quote with leave with one other quote, from John Kenneth Galbraith, the economist, the diplomat, many of you will know him, of a certain age. He started a little book called The Economics of Innocent Fraud, which I recommend. It's 60 pages long, beautifully written. He starts off saying, I've done all these things, journalist, public servant, what have you. And throughout, I've learned the difference between conventional wisdom and the reality. And the reality always wins. And I think this is the message, that we have, in some respects, siloed ourselves off from the reality of what is happening in the world in the finance area. And we cannot do that any longer. This is the end of my preaching, simply because these are financial issues that do relate to our kids and our grandkids, and leaving options open. So thank you. I think I've talked too long. It's time for a break, I see. But I'd be happy to take any questions. We can talk around whatever you want to do. Yes. Maybe you could identify yourself for all of us.
I'm Dan Colbert, Television Securities. Can you tell us a little bit about your background, and have you always been involved in this space, or what motivated you to get into it?
My background is 16th century English history, Sir Thomas Smith and the question of sovereignty in Elizabethan England, yeah. You say that lovingly, of course, I'm sure. We got into this at the Noise Foundation very quickly. We realized we had a major program in sustainable agriculture, and we were holding Monsanto stock. And it didn't seem to make sense. So we sat down, and screening was the only thing you can do in those days. That was the nature of the beast. And we sat down, and so we had a discussion. How would we want to change our process, our investment belief system, and put it to action? And the newsprint was all over the wall. What would you like to screen for? And at the end of an hour, I looked at the list and said, there's nothing publicly traded we could buy because of the screens you want. So we took a funnel and said, this is the Noise Foundation, and pulled some things out. And this is what we did. We then moved on to some community investing, some alternative investing. We became a share owner. I haven't even mentioned. Engagement can be a way of adding value to your grants. And I'll give you one little idea there. We were funding an organization of Hispanic and Native American organizers in Albuquerque, New Mexico. And they were having problems with Intel, using an enormous amount of water, which, as you know, New Mexico is a desert state. And they couldn't get Intel's ear at all. And I noticed we had Intel stock, so I called the director and I said, look, we can write them a letter which will have no impact. We can do nothing, which is normative, or we could file a share owner resolution trying to get some information moving on this. And we agreed we would do that, knowing nothing about what we were getting into. The value added to the grantee, we also then gave them $2,000 so they could buy Intel stock, so they could be a share owner rather than a stake owner, if you will. As this process was evolving, the director, a woman, was caricatured in the local newspapers as a witch on a broomstick, fighting Intel, which was a major economic engine there. 2 years later, she was caricatured as the savior of water. Now, no grant would have bought that change of status. It gave them credibility, it gave them power, and things started to change. At Needmore, we were funding a group of tomato pickers, the Committee for Immokalee Workers in Florida. We were trying to get a little more money for what they were doing. Yum Brands was a target of theirs. We filed on their behalf with Yum Brands, and Yum Brands came around and met their demands. So that these things can work, and there are other ways as foundations you can use your assets in addition to looking at them from the point of view of investing. The only other term I would use is investing because the future matters. I don't know if that answers your question. And I learned all of what I know from my Harvard Business School finance chair, who once said to me that I knew as much about most of this as most of his MBA students at Harvard. And it sent a tremor of fear through me, but so be it. Any other questions? Yeah.
If I wanted to scrub an existing portfolio, diverse portfolio
Right.
that has alternatives, private equity,
Right.
stocks, bonds, the whole thing. And, let's say I'm interested in a grade, do I get an A, do I get an F, somewhere in between on a number of criteria, like,
Yeah.
human rights or what service can I employ to provide me with that scrub and an unbiased view?
Unbiased view. That's another issue, but well, no. The answer I would give as a start is that it's a process. In other words, I'm not suggesting that use the analogy of a pool, that you're up on the top of the high board and you're going to jump in. That it is a process of finding comfort. So you might start with your cash investments. Where do you put them in community development? You might look at impact investing. You might think about your portfolios and what are your investment beliefs. There are some consultants out there who can help you. I think there's an advantage in talking to some folks who have been through this process. Folks at Noise who are still there and still working on this. Needmore, myself, Varus Wilp. At any rate, there are.
Consulting colleague.
Right. He heard you.
Back of the room.
I would say that it's an important question, and it's not a question I can answer offhand in this way. Sure, please.
Republic Equity, called Paul Herman, and Dick Investors and Empowered Impact. For your private alternatives, there's a group called GEARS, the Global Impact Investment Rating System, which is getting a lot of credibility. And there's also IRIS, the Impact Rating, International Impact Rating System. And these are organizations that come together, and actually Rocky founded the guys that started GEARS and IRIS. And they've come up with some really credible, robust metrics that if you want to put your portfolio through their process, call them up. They'd be happy to help you out.
That takes it. I agree that they're valuable. It's a start. It's a different.
Grade, like if you look at
Yeah.
the
No, the benchmarks in terms of your investment, I would argue, are the benchmarks that everybody uses, for better or worse. The S&P, the Russell 1. We have never, in the three foundations I've been involved in, have never used any benchmark other than the standard benchmark for each asset class. And I can say that now this is almost 20 years through the three different foundations, we have generally outperformed in all of our asset classes. There have been years where it's off by some, using managers who are good. And in all of this, it's the quality of the manager that you're talking about. They're good, I don't talk about performance per se outside of different managers because people will say, well, SRI has outperformed for 20 years. Well, the methodologies have changed so much that it's virtually impossible to do that. That there are some data, and the data are growing, but find the right managers, and I wouldn't worry about the impacts on human rights, break it down by that, but break it down as a portfolio, where are you going? So, okay, thank you.